between Gerrards Cross and Chalfont St. Peter Rotary Club and the Chiltern Speakers Toastmasters Group. A warm welcome to you all. Tonight, our webinar is on green investing. Our aim is to spark debate and take steps to inform people about the true state of the environment. All our previous webinars are available on our website, speakupfortheplanet.com. I'm Raj Patel, your host for this evening. We have three expert speakers tonight who will be talking about renewable and sustainable investments. Some house rules first. This is a recorded webinar. You as attendees can ask questions only by submitting them to the Q&A panel box, which is on the bottom of your screen. These will be addressed by our speakers later in the evening. Each speech is about 12 minutes. Let's get that curiosity fed. And without further ado, I'm going to introduce our first speaker. So our first speaker tonight is Sam Todd. Sam is the director, a partner practice of St. James Place, who specializes in financial planning for individuals, families, and businesses. He's passionate about helping his clients achieve financial well-being in a world worth living. Over to you, Sam.
That's great, Raj. Thanks so much. Now, I'm just going to make sure that my slides are being shared with you all, and fantastic. I'm also just setting a timer to make sure that I stay on course, because I do have a tendency to enjoy the sound of my own voice a little bit too much. So good evening, everyone. As Raj just said, my name's Sam Todd. I am the director of a partner practice of St. James's Place, based over in Windsor. Really excited to be here this evening to speak up for our planet. So thank you for having me along. It's a real honour. Now, my talk this evening is going to have, there we go. Three main sort of themes running through it, and these are on the screen in front of you now. We've got the power of the finance industry to bring about positive change, the power of investors who care what their money is funding, and the growth in the sustainable sector and why it makes sense financially, as well as being, an ethical choice and the right thing to do. Now, I wanted to start with a quote for you all this evening from a gentleman that I'm sure you've all heard of. We've all been at home, probably watched the Netflix documentary. I know I've been watching a bit too much Netflix recently, but I saw this quote and it really sort of occurred to me that the scale of the crisis that we as a human race are facing at the moment. And I think we all do have the will to change the planet. Now, I feel, and hopefully after this evening you'll also agree with me, that one of the biggest ways we can make a difference and sort of make a positive change is through our money. Now, luckily, I'm not the only person that thinks this. These are some of the headlines that I came across while I was doing all of my research for this evening. I'll go into what ESG means in a little bit, but it's wonderful to see how many headlines there are and articles. A simple Google for sustainable investing will just bring up so much information, which is great. And it's great to see that things are moving in the right direction, and this is gaining more and more traction for people, because we all know how bad things could get. I'm not going to go into that too much, but I think we're all aware that this is, the climate crisis isn't going away, and we really need to make a change. Now, I wanted to ask all a question, first of all, to sort of get you thinking. Where is your money invested? Because we've probably all got a pension fund, probably might have a stocks and shares ISA, maybe some other sorts of types of investment. And you might know that money is invested into a fund. That might be a North American equity fund or an emerging markets fund. But do you know what the individual companies are in those funds? Because most of the people that I speak to don't. You might know a few of the holdings because these funds can have any number of companies in them. But how much do you actually know about where your money is going? It could be into some of these places which have historically made up quite a big proportion of people's investment funds. Maybe they don't know that they're investing in these places, but historically these have provided good financial returns for people, and these often do make up quite a bit of people's portfolios, whether they sort of know that or they don't. But as we move towards a more sustainable economy and more sustainability in our daily lives, we would hope that companies like this will become less and less profitable. So we just got to wait and see what happens there. Now, I saw this in the newspaper a few weeks ago. I really wanted to just share it with you all because I think it's a great indicator of where things are going. Denmark is going to not be issuing any more licenses for oil and gas exploration, which is wonderful to see. And I think, it just illustrates where things are going and the sort of phasing out of fossil fuels. So we don't want to be stuck with our money in companies like that. So, oh, hang on. Don't know what happened there. Bear with me. So I wanted to sort of give a bit of a definition of sustainable investing, because it's good to sort of know what it means. Now, I found this one online, and I thought this was one of the best ones I've come across, because it says, it seeks to combine investment performance, which of course is important, because we all, want our money to perform well. But it's about looking beyond the bottom line. So we're not just looking at the financials of the company. It's about doing the right thing, which I think is so important nowadays. And it says it's about encouraging sustainability and contributing to positive and lasting change, which is what we all want, because this is the biggest challenge of our era, and those of eras still to come. And I think we all know that. But the more we do now, the better it's going to set up future generations, because again, as I said, that this isn't going away, and it's something that we're all faced with. Now, ESG, you'll hear this term sort of thrown around all the time. Now, ESG is sort of synonymous with sustainable investing. In case you hadn't sort of worked out already, it stands for environmental, social, and governance. Now, these are the factors that we will look at in addition to a company's sort of profitability when considering if it's an ethical and sustainable investment. So we've got environmental factors, so the impact that this company may have on the planet. What are its sort of greenhouse gas emissions? How does it operate? Equally as important are social aspects. So what are the working conditions like for employees? And how does the company sort of operate in its local community and its impact and sort of outreach there? And then also very important to consider is the governance. How much are their directors paid? What's their tax strategy, which I know is often questionable with these larger companies. We'll all have seen the headlines there. So these are the sort of base factors that we look at in addition to sort of traditional investment analysis that we'd carry out. Now, a Google search for sustainable investing might throw up a few more terms that you might sort of come across. I like to call these the close cousins. We've got green investing, impact investing, thematic, and ethical, and these are all sort of interchangeable terms and slightly different as well, but these are all things that you may come across when you're seeking to do good with your money. Now, I wanted to share this with you all because I thought it was absolutely staggering, and it's really good to see this. So where we are currently is we've got about a third of all professionally managed sort of investments around the world, roughly $30 trillion, which are now subject to these enhanced ESG criteria, which is a fantastic figure. And it shows that things are in a good position and hopefully are going to get more and more popular and gain more and more traction as people wake up to this. And you can see in recent years that more and more money is being sort of invested into sustainable funds. Between April and June of last year, more than $70 billion went into ESG funds alone, which is more than most recent years, which is just fantastic. And it just shows that people are really sort of waking up to this again. Now, for the visual learners of you, I've got this graph, which is from the Financial Times, which again shows this positive upward trend of money being invested into these funds. And it's great to see as well that Europe's really leading the charge here. So we're definitely in the right place to be making sure that our money is doing the right thing. But what is the industry doing? And if you're looking to do good with your money, where can you sort of see through the noise and go to look for advice and things like that? So the first initiative I wanted to speak about is the United Nations Principles of Responsible Investment. Now, these are aimed at the sort of institutional investors, the fund managers, the people who actually get paid to invest sort of clients' money on their behalf. Now, they sort of sign up as a signatory to the principles, and they let these principles guide their decisions and their asset management. And by doing that, they're contributing to sort of a lot more sustainable global financial system, which is great to see that the industry has got these guidelines and that fund managers are signing up to them. This shows the number of signatories signed up to the be guided by the principles. And we can see that again, this is showing this positive upward trend. End of last year, we had over 3,000 asset managers that signed up to integrate these principles into their portfolios, which is wonderful. Another company I wanted to talk about was the MSCI. They've similarly published their own principles of investment as well, but interestingly, they offer sort of like a grading system for companies to sort of look at their ESG practices and their sustainability. And so if you're maybe considering looking at investing in an individual company, you could have a look at its MSCI rating, and hopefully it's up here. Hopefully companies that get rated further down the scale will work to become more and more sustainable and bring themselves further up. Now, this is my favorite slide of this evening. If you take one thing away, I hope it's this one. This was a study carried out by a company called Nordea, who found that having your money invested, your pension invested in a sustainable way, is 27 times more effective at lowering your carbon footprint than any other of these activities combined. So shortening your showers, flying less, taking the train, reducing your meat intake really sort of pales in significance when compared to having your money invested in a sustainable way. So that's really something to think about, and just goes to show the power of investors that care what their money is doing. As with everything, there is risks, and we all face risk. And I personally feel that the biggest risk that people face is by doing nothing and leaving their money where it is, and maybe not reviewing which funds it's in, because they could be caught up, still invested in fossil fuel manufacturers, people building combustion engines and things like that. And that's not where you want to be, because everything is pointing towards sustainability and the sustainable economy and the sustainable world, really. So it's really important to review where your money's at and make sure that you're ahead of the curve. Now, you might have heard sort of historically that sustainability and green investing maybe comes at a cost of investment performance, but that's really not the case, because we're seeing more and more now that the sustainable companies are actually making more profit and being more successful than these companies that aren't adapting. This is a great graph that shows actually stocks with improved ESG principles have actually outperformed the S&P 500 in America, which is wonderful to see. And it just goes to show that you can do good for the planet whilst also benefiting from investment performance as well. So what's the bottom line, and where are we going to sort of end up? And I hope in years to come that sustainable investing won't be a thing. It will just be investing, and everyone's money will be invested in a way that is sustainable and that contributes to a better global financial system, but also a better planet for all of us. I wanted to leave you all with this. I started with the quote, so I'll end with the quote. Is your money on the right or the wrong side of climate history? And if it isn't, what are the steps that you're going to take to get it on the right side? I guess all that's left to say is thank you for listening. I hope you've enjoyed it, and I look forward to listening to the other speakers and your questions. And thank you for having me along to speak up for our planet.
Thank you, Sam. That was very insightful. Just for people on the webinar, if you've got any questions for Sam, can you put them into the chat now so we can go through them? Sam, that was a lot of information to take in, and we understand what Richard Attenborough was saying and Carney was saying. But a question for you, Sam, is how can we get started down this road? I mean, apart from handing over our money to an asset manager, how can we get started? What will the first steps be?
So, I would say to people, and I know that was a lot of information to take in, but we're all at home at the moment. We've all baked the sourdoughs. We've all done that stuff, right? We've all completed Netflix. So now it might be time to dig out your old pension statements. It might be time to look at those investments that you've had for years, but you're not really sure where they are, and look at the funds they're invested in. And we've got the wonders of the internet now. You can search for the funds that you're invested in now, and you can just have a look and see what the holdings are. You can find fund fact sheets online. You can find all of this and sort of get yourself a picture of where your money is at the moment, and then you can really move to sort of making that more sustainable. The internet is a wonderful place, and there's so much great sort of guidance and information out there.
I can totally understand. The internet is a vast array of pool, and you can get a lot of information there. But if you were to point us at one side apart from St. James's Place, where would you go?
Yeah, of course. Well, you can have a look at Morningstar. That they offer a lot of sort of insight into this sustainability and these funds, and you can actually review your current funds on there as well. So definitely have a look at that, and just sort of have a look around and sort of make sure that you're investing in the right places.
Do you have a top tip where I could put my money into one stock?
No, I'm afraid no. There's not just one.
Okay. So I've got a question that's coming now. A few years ago, the fund industry used words like cautious and balanced, right? And they obviously lost their meaning. It seems to me that we're on the way doing the same with the word sustainable. Is there a real definition or discipline on this industry in using this term?
Well, yeah, absolutely. And I think Paul's going to go into a bit more. They call it sort of greenwashing and things like that. So it's important to look through the noise and make sure that you are investing in an actual sustainable fund. I was reading an article just this week about some of these funds that have sort of labeled themselves as sustainable, but still have holdings in, mining companies and fossil fuel producers and things like that. So it's so important to really make sure that you're in the right places. But again, it's not just a word. I think that there is some real funds making some real difference to the planet. But you're just going to make sure that you're going to the right places for that.
That's a great answer. Thank you for that. Now, one final question is your initial comments that we wanted the profits of various industries to fall. Surely the most successful companies will be the ones that can transition from old source of profit to new ones. Various oil companies, for example, are working very hard to transition. I think we should be encouraging and looking for a change rather than categorizing old industries as unclean.
No, absolutely. I totally agree with that. And as I said, that I hope that the companies that maybe are slightly laggard in their approaches are improving. And of course, you companies like BP are doing loads to make sure that they are getting ahead of the curve and developing and changing. But unfortunately, as with everything, I think there are some companies that are probably dragging their heels. But as things sort of develop more and more, then of course, I would want companies to develop and become more sustainable, as we all are as individuals as well. And it's important for everyone to develop.
Yes, Sam, that's really, really great. Thank you for your clarity on those questions. Yeah, it's really good.
Thank you.
So like you said, you introduced Paul now. So Paul Bryant, he's an author and an equity analyst covering the UK financial services company, helping asset managers to run sustainable investing funds. He's passionate in investing, so much so that he writes for magazines like The Review, and he's recently published a book called Sustainable Investing for Everyone, a private investor's guide, which he just published. He's going to be bridging the gap between the corporate and the private investor and breaking down the jargon. So let's enjoy his tips and him breaking down the jargon. Over to you, Paul.
Thank you, Raj. And good evening, everyone. Thanks for the introduction. And yeah, great overview by Sam. And I think there's a couple of points he's raised there, which I'll drill down to in a bit more detail. Just going to get my slideshow up and running. So my aim tonight is to get as many people as possible to move on from just thinking about sustainable investing to taking the first steps to actually doing it. So it is that practical guide. Hold on, I'm just trying to, I've got a bit of a PowerPoint hang here. There we go, got it going. So there's a big focus on the practical side. The key thing I'd like to stress, Sam touched on this, is that I'm talking about investing, not philanthropy. So it's about dealing with people's pensions, people's life savings. So we cannot abandon the financial side of investing. I think that's something I can't stress highly enough in this. And before we dive into the sustainability aspects of this, I just want to throw a few financial decisions which people really need to get clear in their heads up front before they even start thinking about sustainable. For the key ones, I think upfront, are you going to be a do-it-yourself investor, or are you going to use a financial advisor? Going the advisor route, obviously they'll hold your hand through most of the financial decisions, questions 2, 3, and 4 below. Going the do-it-yourself investor route, so those of us like myself, I manage my own portfolios, so we're talking about using platforms, Hargreaves Lansdown, AJ Bell, some of the more techie ones, Nutmeg or Wealthify. But we're going to have to be making the financial decisions ourselves first. So what are some of those? Industry jargon, asset allocation. How much of our portfolio are we going to put into stocks and shares? How much into corporate bonds, government bonds? How much do we hold in cash? Are we going to invest in individual stocks, or are we going to use investment funds? And then when thinking about those financial products, how will you actually assess their financial credentials? You know, are we capable of valuing companies? How do we assess the performance of a fund? So these are the kind of things which we just need to address right up front before the sustainability angle. And one thing I do want to focus on, just moving on to the next slide, Sam made a great point, which I agree with, and there's plenty of evidence, not just from the industry, plenty of academic evidence, which says that investing sustainably can and should give you higher returns. That's absolutely true. On average, it does. But while many of these are industries of the future, winning industries, fast-growing industries, it's not necessarily a given that those returns will be good. And I just wanted to give you a bit of a flavor there. I had a look at the solar energy sector, and what this chart shows, it's the price of an investment fund which only invests in solar energy stocks. So it goes from 2011 through to 2020. Now, during this time, the solar industry was absolutely flying. Just to give you an example, in the US, the installed base of solar energy was 1 gigawatt in 2009. By the time of 2019, it was 81. So huge growth there. That was enough to power 16 million households in the US. But as an investor, if I'd invested in 2009 or 2010, you can see from the chart there, there'd be some pretty big drawdowns I'd have to live with. I could have lost 85% of my money, 2012, moving along between 2015 and 2017, another 65% dip. And then if I was holding or buying in 2018, they went up 300% in a year or two. So it was a pretty wild ride in solar. So the point of this is really just to stress the importance of financial analysis, understanding the economics of industries as well, not just their sustainability. But what does it mean when we do talk about sustainability from an investing point of view? So a number of reports on the industry. I found 7 different strategies used by investment professionals. Some of them are pretty small and on the margins. And I think as private investors, there's 4, which is really worth us focusing on. Sam has touched on a couple of these, but worth getting into a bit more detail because we're trying to get into some practical recommendations. First one, fairly straightforward, negative screening, fancy word. All it means is you don't invest in certain sectors. And as Sam said, typical ones, oil and gas, airlines, tobacco, these kind of things. What it does do, it then leaves the rest of the investing universe, which we can have a look at and seriously consider investing in. Very commonly used, but a bit of a blunt instrument. Second one down, fancy name, ESG integration, environmental, social, and governance. So typically what this process means, and this is now becoming very common with fund managers, they'll assess the operating practices of companies based on their environmental practices, things like carbon footprint, their social practices, do they pay their workers enough, conditions in the supply chain, and then their governance practices. Do they overpay executives, possibly gender balance on the board, things like that. So those are the 2 most common strategies used. Smaller, being used by less in the investment industry, but growing very, very quickly, is something called sustainability themed investing. So this is taking typically sectors or themes. So it could be alternative energy, sustainable agriculture, sustainable water practices. You're seeing more and more funds like these now. Something that really is starting to grow quickly is investments that focus on biodiversity, so improving it or minimizing the damage to biodiversity, becoming a more common investment theme. The fourth one there, not so much applicable to those of us that invest in individual shares, but for those of us who invest in funds, very applicable, called corporate engagement. So what you're finding, more and more investment funds are actually engaging with boards of directors, with company management, and saying to them, look, there might be some sustainability stuff we're not happy with. If you want us to stay as investors, we're looking for you to change your ways, or it may be if you want us to become an investor in your company, these are the kind of things we're looking for. Very powerful tool. Don't forget that fund managers are wanting to attract the investment pounds of us as consumers. So they will do what we are looking for. And if those investment funds, which are executing a very robust corporate engagement, if they're attracting more money from investors, they'll keep doing it and they'll keep more of it. So the point here is, before you actually get into the nuts and bolts, it is important to decide what sustainable investing means to you. There is no one single right answer. And one of the questions which came in for Sam was talking about the transition from and grouping whole industries. It's a very important point to bear in mind here as well. And a good way to think about it is, are you going to invest in something that's already good, or are you investing to improve? So, someone mentioned BP, great example. Yeah, it's an oil and gas company, but it is also one of the biggest investors in renewable energy as well. So, for some people, it's a non-starter. They're not interested in a BP. Others are saying, well, let's encourage that behavior. It will make a difference. So that's a decision you need to make. So getting a little bit more into the weeds, those of us who do pick individual stocks. So let's keep it simple. We have an existing portfolio, theoretical situation. My advice is keep it as simple as you can. Take your top 5 holdings. What are the 5 companies which form the biggest part of your portfolio? Go and have a look at those. That's a first step starting point. How do you have a look at them from a sustainability point of view? I would suggest, first step, go and look at some of the free tools which are available. Some of them are excellent. Sam mentioned MSCI. They do some great stuff. I'll go into a bit more detail now, show you the kind of things which they do produce. The 2 most common ones would be Sustainalytics from a company perspective and MSCI. Another fantastic one, Just Capital. Only problem is that's only US companies. This is a US organization, but they give you the most detail. So if you're investing in Apple, Facebook, Tesla, go and have a look at the Just Capital website. You can drill down into a lot of detail and all sorts of stuff there on their sustainability credentials. But those are just 3. There are plenty out there. Those are the 3 I would say probably a good starting point, but it's becoming quite a big industry now. So to give you a flavor of the kind, oops, hold on one sec. Where am I? There we are. Give you a flavor of the kind of information you'll get from these tools. I just plugged Tesla into the MSCI ratings. This is the little one-pager you'd get. So I thought it was an interesting one, because we might think, okay, electric vehicles, you'd think this would be right up at the top. But MSCI ranks it as average among 41 automobile companies. So kind of, why is that, was my first reaction. And you can have a look, gives you a little bit more detail here. So down the bottom of that chart, you can see there, where is it an ESG leader, where you'd expect the product carbon footprint, that looks great. Opportunities in clean tech, there it's a leader. But it's actually a laggard in labor management. So that would be more, I suppose, on the S of the E, S, and G, where it's not so good. Now, that's not a huge level of detail, but it's a great starting point for you to go and dig deeper. So you might want to go and do a Google search on Tesla, which I did, and they'd had a couple of issues with staff safety and a few other things like that. And then it's really us as individuals making a call. So how do I approach that? Is that something which gongs Tesla out for me from a sustainable investment point of view, or is that something I can live with? Is it a blip? So great starting point. That's just the MSCI one. Go and have a look at all of them. You know, it really is, this takes a few minutes. And what you can do then with those top holdings in your portfolio, get a really quick overview of what other people think of them who've had a good look at them. And then go and dig a bit deeper, go and read their annual reports. Most companies now produce pretty good sustainability reports. You can see what they're up to. If they are no good, then it's time to start looking for alternatives. Excuse me. So second scenario, if we're building a stock portfolio from scratch, so we're not just picking individual stocks now, we've got to go and find them. Best thing I can do, and this is what I do, I cheat a bit. I piggyback on the fund managers. So if you go onto a site like Morningstar, Sam's already mentioned them. They're one of the best with this sort of information. You can see a screenshot there. Where I can go and filter looking for funds. So I've looked there for funds which specialize in alternative energy. They have a 5-star financial rating, and they have what Morningstar rates a 5 Globe sustainability rating. So that's the highest. Plugging that in, that gives me a handful of funds which I could look at. So the first one there, BlackRock, one of the biggest fund managers, I think it is the biggest fund manager in the world. They have a specialist sustainable energy fund. I click through there, and they will show me their top 5 or 10 companies they're invested in. I might want to have a look at another couple of funds. I've immediately got a list of 10 or 20 alternative energy companies, which I can seriously consider as investments and dig into them in some detail. So that's a great way to start the sustainability analysis if you're a stock picker. What if you only invest in funds? I've shown you there the Morningstar Fund Screener. That's a great place to start. You can filter them by a whole bunch of criteria. MSCI also has a tool. And this is the kind of stuff you will get from them on a fund. So very similar sort of thing to what I showed you with Tesla, which is an individual company. But this is now evaluating the fund in aggregate. So it compares funds to others in its sector. You can see on the top right, it classifies how many companies held in the fund are leaders in ESG. That's pretty useful. So you'd be looking for those bars to be skewed towards the right. Gives you carbon intensity, green versus brown revenue, corporate governance. And then it gives you the exposure to some of the bad stuff. So you can see this one's got 2 tobacco companies, might be a flag for me. So even though it's AA rated, supposed to be pretty good, I don't know if I'd be comfortable with that. And there's even what they've got, the UN violations. There's a company which has got some problems there. So I'd want to dig into this one in a bit more detail. But you can see the kind of stuff, they're really useful information. Morningstar is something similar, styled slightly differently. You can see the fund screener tool blown up a little bit here. And then there's their globes and a few other things on ESG breakdown scores. Similar sort of thing. So really worth doing. Then just finishing off, Sam touched on this, but it really is worth going into a bit more detail on this. What I've titled this slide, Beware of Labels and Ratings Bearing Gifts. So I was doing a search I haven't given you the full name of this fund, but trust me on this one, it's got ethical in its name. Click through on the fund, it gives you its top 10 holdings. And what do we find? Second largest, Ford. I don't know if you'd exactly call that something which would qualify as most people sustainable or ethical. Third largest holding, Petrobras, pure play oil and gas company. Number 5 or 6, Vermilion Energy, exactly the same thing, pure play oil and gas company. Excuse me. So the message here, don't trust the labels. It really does bear, it is worth digging into the details and really studying these things yourself. So knowledge, I think, is the most important thing I would stress if you want to get into sustainable investing. Understand what you are investing in and why. I think that's the end of the formal one. If you want to find out a bit more, I've got all of the stuff I write about on my website, paulcbryant.com. And my book, it really is delving into more detail on the stuff I've spoken about tonight. You'll find that on Amazon with that search. Thank you.
Thank you, Paul. I love the talk and the fact that you've given me a process and some steps. So I know where I can put my shares and my funds. I can look at the Morningstar, I can look at the ratings, and then dive in deeper. That was really good. I enjoyed that. Thank you. For people on the webinar, if you've got questions, please put them in the Q&A. In the meantime, Paul, I have a question for you. Do you think there's a danger of an investment bubble forming, especially around the sustainable finance, because it has become so popular so quickly?
Yeah, Raj, is there a danger? Yes, most definitely. It is attracting a lot of funds, and you could certainly create an argument that certain, excuse me, I've got a bit of a frog in the throat. One sec. Certain individual shares are very highly valued. There's some high valuations in the green energy space at the moment. But I was actually going to do a little slide on this because I have a chapter on it in my book. I'm going to show you something. Give me one sec. There's a very interesting, no, it is that one.
Bubble test, yeah.
Bubble test, yeah. So Robert Shiller is a very famous economist. He's a Nobel laureate. And he's put together a list of questions, almost a test, you know, on bubbles. And you run your way through this. There's a handful of those questions you would answer yes to, but most of them not. So have asset prices increased sharply? Yes. Public excitement? I don't know. Public interest? Maybe not excitement. Media frenzy? Again, media interest. Are there envy-inducing stories of you know, common people striking it rich? In sustainable investing, I would probably say not. You might say Tesla, they are, but really that's kind of one-off. So most of these, I would say no, there isn't evidence or obvious evidence of a bubble, but certainly evidence that some sectors in sustainable investing do command quite a high price at the moment. Yeah, no doubt.
Thank you, Paul. That helps us clarify that one. That's really good. On the subject of bubbles, what should we make of the Tesla buying into Bitcoin?
To me, is that for me?
Yeah, that's coming to you. Yeah.
I would not call Bitcoin a sustainable investment thing. I do not have the knowledge to answer that question. I'm going to put my hand up.
Okay. Paul, there's a lot of people here and they're wondering, investing is always hard. Is there a sustainable groups we can join who are sort of going along this path of investing? Is it like a group?
Yes, probably the best ones I've come across are on LinkedIn. So for those attendees who are members of LinkedIn, if you do a bit of a search there on ESG or sustainable investing, you'll definitely find some really credible groups. I'm a member of a few of them, and there are some ideas there as well. You'll always find discussions of the various share forums. but some of they vary a lot in quality. You get some really good ones, and some are sort of pump and dump schemes. You've got to be a little bit careful. They vary a lot. So my starting point for that, I think, would probably be LinkedIn as a safer route, and you get guys who, applying their minds to investments there. They don't always agree, but there'll be some good commentary there.
Yeah, I suppose on LinkedIn, you know where it's coming from as well. So,
yes, exactly. Yeah.
So I think this is a quote here. It says, given the regulation of the financial services industry, how can funds be misnamed, especially in terms of ethical?
Yeah, exactly. Well, I mean, the short answer is there is very little specific regulation around stuff like that. And these things are not defined. Now we're getting there. One of the leaders of the EU has done a lot of work in this space, and what they're bringing in, they call it a taxonomy. So actually defining what green investing, sustainable investing is, what qualifies, what doesn't qualify. So that'll go some way to addressing that. But I suppose the short answer is the investment industry has moved ahead of regulation. It's moved faster. This is being driven by commercial motives. This is a big deal. People want to invest sustainably, and regulation is playing catch up, I think, is the short answer.
Excellent. Well, thank you for all your points of view. I'm sure they've been very beneficial to our group tonight. And like I said, I think in your book, I think the Sustainable Investing for Everyone, I'm sure you've broken down a lot of these things into there. So thank you for that, Paul.
Pleasure. Yeah, thank you very much.
So we're going to move on to our third and final speaker. We save the best till last, Joanne Cool. Now, Joanne is an experienced financial advisor. As a financial advisor, her main role is to work with clients, not only to understand where they are today, but more importantly, plan for the future. This includes your savings and, more importantly, your pension. 18 months ago, Joanna had a wake-up call, realizing the importance of the climate crisis. Well, Joanna suddenly then redefined her view, and now advises exclusively on the impact of sustainable investments. So, Joanne, over to you.
Thank you, Raj. Right, here we go. Yeah, just to introduce myself very briefly, my talk is more simple, shall we say, than the previous two, in as much as I'm not used to giving presentations. My conversations are normally with individual clients. So what I'm talking about is very much based around the kind of conversation I would have with one of my clients. On the impact investing side, which is what I do advise on exclusively now, that is the third group, if you like. We have ethical, which we've talked about, which is negative screening. We have the ESG, and then we have impact, which is a much smaller marketplace, but that's where I'm now specializing. So to start with, how eco-friendly you are at the moment in your daily life and the actual effect you are having on climate change. We can go right from low impact through to high impact. The four most effective ways to reduce your carbon footprint are to eat a plant-based diet, which we know, avoid air travel as much as possible, have a smaller family if it's not too late already, and the big one, to live car-free. And actually, if you can make the commitment to live car-free, then you're actually going to be saving 2.4 CO2 tons each year. But of course, they're big decisions and possibly not decisions that you're ready to take yet. This is the beauty of being able to invest into these areas that you can't, maybe in ways that you can't change your own lifestyle. And Sam did actually pinch that wonderful statistic, but it's so wonderful, I'm going to use it again. And that is that making your investments green can be 27 times more effective than leading the highest impact style on climate change. And for me, as an advisor and an impact-only advisor, that's a very exciting statistic. We touched on greenwashing. Actually, it's become a real buzzword now in the investment world. But actually, just for interest, this started, was first coined by a hotel, their policy of asking customers to reuse their towels. I'm sure you've all come across it, the little card in your room which says, please, you know, if you haven't used your towel, please hang it back up again. And their justification was that it was going to help the environment and save water. But now we all realise it was all about saving the hotel money. This little slide on the left shows you a Muller corner yogurt pot, which, as you'll mostly know, is normally white plastic. But obviously here they've made it look like the bark of a tree, presumably because of the ingredients all come from trees. I can't quite see what they are, but I think they're nuts and bananas and something like that, which of course is a complete fallacy. There's nothing ethical or environmentally friendly about it at all. And this, the bottle of Fiji water, which says it protects the Fijian rainforests, goodness knows how, but even if they can justify it, it's still coming in a plastic bottle. So impact investing goes one stage further, and it's actually investing to make a difference. A really good place to start is to consider your bank, and I'm glad to say we haven't talked about banks yet. If we just run through these, Nationwide, which of course is a very well-known bank, and because it's a mutual, it doesn't invest and it doesn't have shareholders. The Charity Bank is similar, only a savings account. Monzo is one of these new small challenger UK banks. And the Corporate Bank, of course, the Cooperative Bank, which we all know really well, sadly now owned by a hedge fund, but it still very much has its ethical policy in place. But going back to the top, Triodos Bank, I actually now bank with Triodos. If you're not familiar with it, it's a Dutch bank which has its head office in Bristol. And it has an incredibly strict lending policy and high environmental policy. And if you do take out an account with them and you go onto their mobile app, it's very exciting because they register your postcode, obviously, and you have access to a little icon that says community, and you can go in and see which businesses they are supporting locally to you. And I did that this morning. I'm now moved to Gloucestershire. And it came up with 3 organic farms local to me, not surprising because it's a very rural area. Ross-on-Wye, Abergavenny, an organic dairy farm in Monmouth. And I have to say, it's very exciting to think that by banking with them, I'm being part of that. And the other thing that you might find useful, and I know Jane's converted to it, Ethical Consumer. Again, if you haven't come across it, it's a digital online magazine which does research on all sorts of products. And I don't buy anything now without consulting it first. So from food, cleaning products, my washing machine, cars, even pension funds, believe it or not. Okay, so moving on to impact investing again, it's very much, they invest in line with the UN goals. I'm not going to go through them all, but you're probably well aware there are 17 of them. But I think what is really staggering is that we need 5 to 7 trillion per year to achieve these goals, year on. Currently, to give you an idea, in the UK alone, and we are big investors in the UK, we have a brilliant stock market and a very sophisticated financial services. We have 7.7 trillion invested in the whole of the UK investors. So it just gives you an idea of how much we actually need to achieve these goals. Out of that 7.7 trillion, I mean, Sam was saying that the statistics are changing, the amount being invested in ESG funds, which is great. But sadly, we still have, out of that 7.7 trillion, 1.9 trillion in fossil fuels and 1.9 trillion in companies supporting deforestation. So it's getting better, but we still have a way to go. This, I think, is great. You can actually work out, you can measure the impact of your money once it's invested into impact funds. So this is just an example of 20,000, which is your maximum allowance in an ISA, but obviously it could be in a pension fund as well. So 20,000 in an ISA will save nearly 4 tons of CO2 emissions. So that's actually the same as living without your car for a year. So even if you can't do it yourself, you can do it through your investments. You can also see it provides electricity for renewable electricity for one household in that year, also 275 watts of renewable capacity, and goes towards helping with recycling. So, and obviously the more you invest, the more effect you have. Sadly, workplace pensions, we've talked about these. I do work with my clients a lot on their workplace schemes because most clients have very little understanding of them. And sadly, the default fund for most workplace schemes will not be an ethical fund, and it will be in one of these funds that will invest in companies that are categorized as causing harm. And just to show you the FTSE 100, which of course is our 100 most profitable companies, 33% of them are still causing harm, 33 avoiding harm, and 34 contributing to solutions. So it's not bad. It still is an even split. But in the 33 causing harm, well, of course, we'll find Shell and British Tobacco. In the avoiding harm, the company that I came up with was Unilever. Again, you know, they do make household detergents and ice creams and beauty products, but they are becoming a section leader in running their business operations responsibly and reducing their environmental footprint. So, but if you, as you can see, if you go down to an impact portfolio, then you've got 78% in impact funds. Just to give you an idea, these are just some names you can see of impact companies, successful impact companies. Ørsted, just as an example, is a Danish electrical company, which is now the global leader in renewable energy or wind energy. And then really just to sort of finish is this age-old thing about growth. And having been an advisor for 35 years, the emphasis in all that time has been really how does your clients' investments perform? Are they going to achieve their goals? Are they getting the growth they want or need? And there have been times when clients have been wary, of course, of investing ethically, but things have changed hugely. And as you can see, okay, this is going back to 2014 to 2018, but the impact portfolio is way ahead with the FTSE trailing, and then the world index behind it. I did do, I worked out some figures for two of my clients who've been invested from March last year, which is when the stock market took a real tumble because of just going into lockdown, through to January of this year. One of the clients was not brave enough to go impact, so he's in what we would call traditional or grey funds, whatever you want to call them. He actually got a return of 21.66% during that time, which is still actually quite staggering, and he was actually quite happy with that. But the client in the impact only funds had a return over the same period of 39.52, which is almost double. So he's now rethinking his investment strategy. But just interestingly, as an advisor, before I started advising on ethical funds, I had a choice of 13,000 investment funds to choose from. If you imagine putting those all into a funnel and whittling them all through the stage of ethical, ESG, and then finally coming out with only impact funds, you come right down from 13,000 to between 30 and 40 funds. Huge difference. For those funds to be making a return like that is very exciting, I think, very exciting. So to finish, impact investing is just a new, thoughtful way of investing your money and allowing you, if that's what's important to you, to align your finances with your values. Okay, thank you very much.
Thank you, Joanna. That was a lovely lot of analysis and tools that you've just given us. And I think the way to go is looking at moving my funds to the impact side. Not my financial advisor. Okay, so for everyone, again, if you've got questions, please put them into the Q&A. Yeah, in the meantime, I've got a question for you. So why are ESG and impact funds performing better than traditional ones?
Yeah, I mean, funny enough, that was Paul sort of touched on that really, didn't he, when we were talking about the bubble. But at the moment, because companies with socially impactful ideas and products are sort of more innovative and more progressive, they are doing so much better on the traditional grey dinosaurish companies. And also, I think very much with the planet in the mess that it is, we need these innovative companies, and we are, because they're vital to our future. So, and the more we support them, I think the better they are going to perform, which is good for everybody.
Yeah, that makes total sense to me now. I haven't driven my car over the last year hardly, so hopefully I'll put back the 20,000 into the pot.
There you go.
So then the question arises: is there a minimum amount of money I need to invest in a particular fund, like an impact?
No, and it's interesting. I do get asked that a lot. Going back to the Triodos Bank, who do actually offer their own ISA, so you can go down with as little as 1,000, or I think it's something like £100 monthly. And in fact, I do actually have an ISA with them. But no, most companies will. There's no restriction on what you can invest. So people don't have to think that they have to have lots of money to start making these changes.
Exactly, it's making fine adjustments to where your funds are now at the moment, isn't it? But at least it's good to know that if I wanted to move a little bit, I can move a little bit into there. Yeah, it's not like the Amazon shares where you need a huge amount of money to go into get even one stock. Right, so that's really good. Right, so I'm just going to thank everyone. So Joanna, thank you. Paul, thank you. And of course, Sam, thank you. And I'm just going to open it up to the whole panel now. So any questions that come in, we'll go to the panel now. I suppose I've got one question here. It says, I think more towards Paul. Paul, I think, if I'm only investing like pretty small amounts, I know Joanna impacted on that. Can they really make a difference to like the corporate behavior, or am I just making this my own conscious by investing ethically?
Yeah, sure. Happy to take that, Raj. I mean, the short answer is yes. If you are investing small amounts, chances are you feeding in on a monthly basis into an investment fund, and pick a sustainable fund. Those are going to be picking the most sustainable companies, but I spoke a little bit about corporate engagement as well. They will be talking to companies and pressuring them to up their sustainability. And the more people are investing in funds like that, the more those funds will be encouraged to keep going with those actions. So I can throw a few names out there. Go and have a look at the websites. 2 UK asset managers, very good at this. The one I would recommend, Liontrust Asset Management. The other one, Impax, IMPAX. So they both publish separate, I think they call them corporate engagement reports. They might use slightly different language. And they will explain to you exactly what they are doing, and how they are engaging with companies. Liontrust has got a very good one on some of their achievements with regard to gender, board participation on gender, and they go into numbers. It's not just nice words. They really do get into it. So I think, yeah, definitely.
Yeah, that's why we need an analyst like you, Paul. We need to analyze that data.
Yeah.
Yeah, exactly right. So a question for Joanna or Sam, actually. Which green sustainable investments do you think are likely to be good growth areas for the future? And I'm not going to hold you to it.
That's always a difficult question, isn't it? A loaded one. I think you've got to look at the sort of industries that there's going to be a lot of change in. So, for example, cars, maybe sort of lithium producers and things like that. There's just so much. It's so difficult to really call that one. But I think, as we've said before as well, industries that maybe aren't so sustainable at the moment have also got that massive potential to become more sustainable and grow in that way as well. So I would definitely bear that in mind as well.
And if I could just add, It's very interesting because the more you find out about these funds, that you come across more, if you like, obscure ones or ones you wouldn't have thought of. And one that I use that's doing particularly well is a Fidelity fund, which is a waste and water fund. And I think more and more waste disposal as well is becoming a big issue in all sorts of ways. So I think it's fairly broad, isn't it, Sam? As I say, I think it's quite exciting that all these different industries and areas are coming to the fore.
Makes, yeah, good points, all good points. So one final question tonight now is, how many years do you see it before the UN or the ESG initiatives become more of a requirement rather than a nice to have? Anyone?
Yeah, I can.
Go on, Paul.
I could give you. I'm sure Sam will have something on this as well. It's going to be happening this year. So there's regulation coming in this year where your financial advisor will have to consult you and get your sustainability preferences for your investments. I'm not sure the exact date when that kicks in, but it's 2021. So things are happening now.
Brilliant. Thank you, Paul. Thanks for that. Right, so we're just about to round up now. So I know Jane's got a question. Hold on, we have one more question coming in. Does the panel know what percentage of individuals in the UK actively engage in investing their own money? Not in pension funds, but just investing, in generally investing.
Not the exact answer to that question, but I can give you a rough idea of something very related to it. So one sec, I'm just pulling it out. I haven't got the number at the top of my head. So if you look at the UK stock market, the entire stock market, right? Roughly 17% of that is owned by individuals. So people buying shares directly. Then the balance is things like unit trusts, financial institutions, that sort of thing. Interestingly, in the US, it's more than double that. 40% of the stock market in the US is owned by individuals.
Brilliant.
So it's not the exact answer to the question, but an adjacent one. I hope it's useful.
Great. Okay, so I hope we've answered a lot of your questions today and got some around your curiosity in terms of investing and where to put the money in terms of green funds or sustainable funds. Hope we've answered that. I think, Richard, you're going to launch a poll now. So it'd be really good if you can answer the poll for us today, which is just 2 simple questions, and that would be really good. Richard, just give us a nod when we've got enough answers. How are we doing, Richard? We good? Okay, we've got a few more. So people who are listening in, can you just vote on the poll for us, please? It's very useful for us for the next thing, for the next webinar. So I'll just fill you up in our next webinar is on the 3rd of March, which is calculating your carbon footprint. I hope you can all join us. And remember to invite your friends and family. It's all about educating people in the true state of the environment, making it a sustainable for the future. So again, I want to thank our speakers tonight, Paul, Sam, and Joanne. Thank you very much. And it's good night from our speakers and good night from our team, Richard and Jane, and of course myself, Raj. Have a good night, keep safe, and see you on the next webinar on the 3rd. Thank you very much.